Companies trading at a valuation gap and with a high short interest. These are the short squeeze stocks to buy for 100% returns potential at the blink of an eye. Lucid Group, halving production guidance for 2023 and fully financed through first quarter 2024. Canopy Growth Corporation, strong cash buffer for organic and acquisition-driven growth. Blink Charging, robust revenue growth to sustain in an under-penetrated EV charging infrastructure market. Let's dive in. Here are the 3 stocks to buy for a massive short squeeze rally. Welcome to Timely Investment Research. Short squeeze stocks produced great results in the last bull market. Investors targeted penny or meme stocks with a high short interest in big buying. An initial rally translated into short covering, which accelerated the upside. I am sure investors remember the unbelievable rally in GameStop. This trading strategy is purely speculative stocks that made sense when the financial system had ample liquidity. The same trading strategy makes sense in non-speculative stocks today, with investors being increasingly selective amidst tight monetary policies. I would target stocks with decent business fundamentals and high short interest as a percent of free float. 1 or 2 pieces of good news can send these stocks skyrocketing. I would bet on 100% returns on these short squeeze stocks in the next 6 to 12 months. Let's discuss why these short squeeze stocks are worth considering at current levels. Number 1. Lucid Group. Lucid Group stock has disappointed investors with a correction of 65% in the last 12 months. With a short interest that's at 20% of the free float, Lucid Group stock seems poised for a short squeeze rally. As a matter of fact, Lucid Group stock has rallied by 27% for year-to-date 2023. For 2022, Lucid reported production of 3,493 vehicles. For the current year, production is expected in the range of 10,000 to 14,000 vehicles. Revenue growth will likely accelerate significantly with an order backlog of 28,000 vehicles. Lucid is also fully financed through first quarter 2024 with a liquidity buffer of $4.9 billion. It's worth noting that Lucid recently opened a studio in Oslo. This is the company's 4th retail space in Europe. Geographical expansion is likely to boost the order backlog. Lucid has also commenced construction of its first overseas factory in Saudi Arabia. Number 2. Canopy Growth Corporation. Canopy Growth stock has been in a sustained downtrend, with federal-level legalization of cannabis being delayed. However, there are several positive catalysts from a business perspective. Canopy Growth Corporation stock is therefore among the top short squeeze stocks to consider at current levels of $2. Another important point is that Canopy closed fourth quarter 2022 with cash and equivalents of $789 million. In a cannabis legalization scenario, the company has ample financial flexibility for aggressive organic and inorganic growth. Canopy Growth is also likely to have lower earnings before interest, taxes, depreciation, and amortization level losses in 2023. The company plans $140 to $160 million in cost reduction for the year. The focus is also on making the Canadian business profitable. As the earnings before interest, taxes, depreciation, and amortization margin improves on a relative basis, Canopy Growth stock is likely to trend higher. Another reason to be bullish for the long term is diversified product offerings. The company's medicinal cannabis revenue growth is likely to sustain. In the coming years, Europe is likely to be a big market for medicinal cannabis products. Number 3. Blink Charging. Blink Charging stock is another name that has plunged in the last 12 months. The short interest in the stock remains above 20%. I would bet on a sharp rally for Blink Charging stock from oversold levels. For 2022, Blink Charging reported 192% year-on-year revenue growth to $61.1 million. For the current year, the company is targeting revenue of $105 million, mid-range, with a gross profit margin of 30%. Last year, the company witnessed a widening of earnings before interest, taxes, depreciation, and amortization losses. However, as services revenue recurring increases, the company is positioned to deliver a higher earnings before interest, taxes, depreciation, and amortization margin. Operating leverage will also drive better margins. It's worth noting that Blink Charging has boosted its presence across 25 countries. With a big addressable market in the US and Europe, the company's robust growth will likely sustain. Overall, Blink Charging faces intense competition. However, the industry remains underpenetrated. There is ample headroom for growth, and the stock seems undervalued. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.